Hey, Casey Keneally here from Gone and Keneally. I want to do a quick video this month on something we get a lot of questions about, which is transferring money to minors. And people ask us all the time about UTMA and UGMA and some of these other things that you may have heard of. And so I just want to go through those real quickly with you to make sure you understand the differences in types of accounts that are out there. So when we talk about giving money to minors, we're talking about kids typically under the age of 18. So this could be children or grandchildren. And for this particular discussion, I'm talking about giving them money while you're still alive rather than after you've passed away, because there's different ways that we do that. So the two types of accounts that we hear most about are UGMA accounts, or Uniform Gifts to Minors Act, UGMA, or UTMA accounts, UTMA, which is Uniform Transfers to Minors Act. So UTMA or UGMA, UGMA or UTMA. Both give money to minors, both work in very similar but slightly different ways, okay? So both are what are called custodial accounts. A custodial account is simply an account that someone else manages. So how do you set one of these up? You go to your bank, you say, I want to open up a custodial account for my child or grandchild. You give them information about the child's name, social security number, etc., and your own, and you can deposit money into that account, and it's essentially that child's money at that point, okay? But you are the custodian managing it for them. Okay, so it's the kid's money, but they can't take it out yet because they're still a minor, okay? So it effectively works like a trust that's gonna hold assets for that child during their childhood, right? It's a statutory trust, essentially, where the rules are already set up by the government. But the rules are very specific and you cannot modify them, so you have to follow the rules as they're written. And so essentially what can be in those? Cash, stock, bonds, there's even a type of account where you can put real estate in there. So all kinds of different things can go into those types of accounts. The key here is that it becomes the child's money when they reach the age of majority. The age of majority is typically either 18 or 21. So in Missouri, both for UGMA, UGMA, and UTMA accounts, it's age 21 is when they get full access to the money. In Kansas, for a UGMA account, UGMA, it's 18, or for a UTMA account, UTMA, in Kansas is 21. Effectively, we see mostly UTMA accounts, so they're almost always 21 years old in Kansas and Missouri. But if you're in a different state, look up the state law there, because it does change state to state. That's a state-based law, okay? So that means at the age of 21, essentially, the child can go in and take all of the money and go to Vegas immediately. There is no further control that you have after the child turns 21 on those accounts. So what are the differences between UGMA and UTMA accounts? UGMA accounts, those are purely financial accounts, stocks, bonds, mutual funds, those types of financial instruments. UTMA accounts, which is the one we see more often, hold all of those financial assets, plus they can also hold things like real estate. So functionally, we see mostly UTMA accounts, UTMA accounts, and they all have the majority age of 21 on there, okay? So how do these get taxed? Typically, the taxes are paid every year. There is no tax deferral on these, like an IRA or a 401k, so you're gonna pay the taxes every year, and it's typically gonna go on the child's tax return. The child's tax return is usually where that ends up for capital gains and income. So why do people set these up? Three big reasons, okay? Number one, simplicity. For smaller dollar amounts, it's really easy to set up. You go to your bank, financial institution, set up the account. It takes minutes. You don't have to hire lawyers like me to put together a trust or anything else. The transfers, number two, are financial products to minors when you can't usually do that. So if you want to transfer stock or ownership in a company to a minor, you can't do that without one of these types of accounts typically. And three, it keeps money out of the hands of teenagers. So if you wanted to give some money to a kid for long term and you don't want a 16-year-old blowing it all, an UTMA account works great, because then they get the money, but they don't get it till they're 21. Now, downsides, when they turn 21, if they're still not responsible, you don't have any control. You can't stop them from taking the money out at 21. Like I said, it's a trust, but it's a trust with very specific rules that stops at age 21, okay? So typically we're seeing clients usually use these for smaller gifts. We're talking thousands or tens of thousands of dollars. Anything more than that, we're using some other method, right? We're using a trust, a gifting trust, something else to do that, and we can obviously help with those if you need it. If you have more questions about UGMA accounts or UTMA accounts, or would like to talk about giving more money to some minor children out there, just let us know. Either send us an email or give us a call, 913-262-2000. Thanks.